Hey, today we're going to talk about building a portfolio for someone that is very, very close to retirement or currently retired. And we're going to do something that I promise you have never seen any wealth manager talk about before. All right, so we've got the whiteboard here. We're going to use it again. You guys haven't said that you hated the whiteboard, so I'm going to keep using it until somebody says that it either sucks or to continue using it. What we're going to talk about today, look, we've got people that are nearing retirement. A lot of my clients come to me and they are very close to retirement, and we have a handful of people that we've just kind of started working with that are currently retired. So we want to talk about what it means to build a portfolio for those people. They can't take a lot of risk, right? We don't want to bet it all on Apple or just assume that the S&P is going to go up for 9, 10, 11, 12 years and just go higher through their retirement. So I want to talk about a portfolio that we're building using our Rent Your IRA approach. Now, if you don't know what renting your IRA means, we've done a lot of great videos on this. I've got a good one on our website. It's right on the home page, and I'm hoping we can add a few more to those here in the future. But basically what we're talking about is buying or building a portfolio and then letting other people pay you to rent those investments while you hold them, okay? So that's just an analogy that we use like real estate. You buy 4 or 5 homes and then you rent them out to people over the years, right? And they pay the rent, they help you pay the costs down, things like that. Well, today we're gonna talk about in particular with the retirees. So what I'm gonna do is we're gonna say that there are 5, maybe 6 positions, okay? And I'm just going to draw these lines here to kind of illustrate positions. So we'll say 1, 2, 3, 4, 5, 6. Okay, so let's say you have an IRA and inside of it we decide we're going to add 6 positions. I don't know that you would have 6, maybe you would have 12, maybe you would have 5. We'll have to see what fits for you. For this example, I'm going to say we have 6 positions. Now, depending on what you choose, right? You can choose investments that work together or investments that work against each other. So a great example would be taking a stock like Apple. We all have heard of Apple. Apple is a big tech company. I don't need to explain much more there. But if you owned Apple and you also owned something like Facebook or owned the NASDAQ in general, they would generally move in the same direction. It would be very rare and probably only for a brief moment for one to go this way and one to go this way, right? So we call those correlated. They're gonna move together. Apple and Facebook for the most part move together. You could say the same thing for a retail stock, maybe Macy's and Dillard's if they're still around. I haven't seen that in a while. But retail stocks generally moving in the same direction. Oil stocks, all generally moving in the same direction. If there's some kind of news for one of those companies, then maybe just for a brief moment or for a day or two, they might kind of spread apart. But for the most part, they move together. Now, if you're younger and you have 6 investments in your IRA, then you want to let it go. You want them all to move with the market. When the S&P is moving higher, when the Dow is heading higher, the NASDAQ, you want all of them to go with it. You don't really need any protection or something to be hedging yourself at all. However, when you get close to retirement, we don't want to have positions that are all moving higher with the market. That could be a problem, especially now. The markets are up going on 9 years. When does that happen, right? Do you think the markets are just going to go up for another 5 years from here? And if you're near retirement, are you expecting for the markets to go higher all through retirement? What happens if they pull back even just a little bit and you've got 6 investments that are all betting in the direction of the market? So what we want to do is we want to say that someone that's retiring soon, let's go 50 plus, and you probably can't see that too well, but we're going to say 50 plus, you just know that's what it is. We're going to split these investments up. Now, stick with me here for a second. We're going to say investment number 1 moves higher with the market. And let's say that when the S&P is higher by some percentage, investment number 1 is also higher by that same amount. Then we're going to say investment 2 is basically moving with the market, but not quite as much, okay? Investment number 3 is going to participate at some fraction of the other ones, meaning it's going to be up when the market's up, but it's not going to be like beating the market, okay? So we've got these 3 investments here. Now, normally what we would do is on the rest of these investments, we would go and talk to you about it. I would talk to my clients and say, this is where I think we should build your portfolio, but is there anything fun that you want to invest in? Is there something that you feel partial to? Do you have a company that you work for? Do you like gold? A lot of people like gold and they just want to have a little gold in there. That's where we do the rest of this. However, if you're retiring, we don't have time to speculate on stocks, right? I don't care if you think Facebook or Snapchat, for that matter, is the next great social media platform. We don't have time to do that. You're trying to retire. You don't want to lose a lot of your money. So what we're going to do over here is we're going to say investments 4, 5, and 6 are going to move down with the market. So as the market moves higher, investments 4, 5, and 6 are going to move lower. Why in the world would we do that? Why would we pick something that's going to go against the grain here? Well, we're trying to balance this out. And hopefully by these lines here, I'm hoping you're able to see. Let me see if you can see it. I'm going to look at my little screen. Yeah, you can see the lines. Perfect. So by balancing these out, what have we just done? We have taken investments 1 and 6 that are going to move in the exact opposite direction of each other. Investments 2 and 5 are going to move in the exact opposite direction. 3 and 4 in the exact opposite direction. So overall, we're not going to end up with any money here. If the markets are higher one day, how much money are we going to make? This portfolio is going to, let's say the markets are higher. This portfolio is going to make roughly 0. All right? Well, that doesn't sound too exciting. If the market is lower, then this portfolio is going to make roughly 0. Now, it's not perfect, okay? It's going to be pretty close, but it's not exactly perfect. Nothing's perfect with investing. So no matter if the market goes higher or lower, our portfolio ends up with no money, right? The change on the day, if you look in and log into your app, you go, I didn't make any money. Oh, the market went up 2% today. Oh man, I didn't make any money. The market's dropped 5% and it was some crazy day or something. I didn't lose any money. You didn't make any money either, okay? This is where this renting your IRA comes into the picture here. We are not, as someone who's about to retire, we are not trying to make money off of these investments. If each one of these were homes, we would say, it really doesn't matter to us what we make off the home. The value of the home will work itself out over time, right? So it doesn't really matter to you what happens. Over time, you're going to sell this one when it's doing well. You're going to sell this one maybe when the markets fall and this starts doing well. But you're not concerned with making money. What you're concerned with is getting rent from each one of these every single month, right? A little money just for holding them. Now this adds up. It might be a couple hundred here. It depends on how much you have in your account, but it might be a few hundred. And so while the portfolio does nothing for each month, hopefully, right? Roughly just a sort of a break-even approach. The rent that you bring in, that's where you make the money, right? Because you own these homes, quote, and you're able to collect rent on every single one of them. Now, that's just an overview of building a balanced portfolio and being able to rent them out. It's not suitable for someone that's younger because you want to take the risk. You want to make money off of all these homes and collect the rent at the same time. But someone who's about to retire, we don't want to take a lot of risk, and so that's how we approach this. Now, you should know that this is not some weird scam or some sort of hybrid thing that I came up with. It's being done every single day. The problem is most people won't do the extra work for the retirement accounts. There is nothing wrong with doing this in a retirement account. It's just companies like Betterment and Wealthfront, they don't want to do it. They make money off, they make that 1/4% every single year just by letting you leave your money there and trust a computer to do it. The big companies, the Schwabs, Franklin Templetons, they'll do it for the really, really, really wealthy people, and they're going to charge them a lot of money for doing it. I do it for everyone as long as you have income or you have at least, you got to have a net worth sort of requirement there, and you also have to have at least $35,000 in your account. You got to have some money to spread out, right? If you only have $2,000 in your IRA, first of all, you need to be taking more risk. You're probably younger. If you have that kind of money in your IRA, we can't really buy multiple properties, if you will. So It's something that's being done every single day. I always use Warren Buffett as an example. He does this just on a super duper large scale because he's filthy rich, right? So it's the same approach. If I can help you with this, then take a second, visit us at jazzwealth.com. You could schedule a call with me directly on our website. Just pick a time that works for you. Even after hours is fine with me. Otherwise, go to our YouTube channel, Facebook, Twitter, LinkedIn. Take a look around at some of the other videos that that explain this in greater detail. Hey, hope to talk to you soon. We'll be doing a lot more of this, so stay tuned.